Did you know that silver just hit a new all-time record high this week, surpassing $64 per ounce for the first time in history? While everyone's focused on gold, there's a silent revolution happening in the silver market that could change everything in 2026. In this video, I'm going to reveal the hidden link between Federal Reserve decisions, interest rates, and the explosive rise in silver prices. This is not just another ordinary analysis. It's a complete story about how a single decision from the central bank can move an entire market toward unprecedented levels. Stay with me until the end, because I'm going to share exclusive insights about expert predictions, precise numbers, and potential scenarios that nobody has discussed in this much detail. Let me start with the stunning facts from this week. On December 11th, 2025, silver recorded its highest price in history at $64.20 per ounce. This means silver has risen 105% compared to the same time last year. But what makes this rise different from any other time is that it surpassed the previous historic peak that had stood for 45 years. Yes, you heard that right, 45 years. Since January 1980, when silver hit $49.95 under exceptional circumstances, we haven't seen these levels until October 2025. What's even more remarkable is that silver has outperformed gold itself. While gold rose 60% this year, silver jumped more than 113%. This massive performance gap tells us something important. There are fundamental forces driving silver that have nothing to do with gold alone. In November 2025, silver was trading around $50. Then, within a few weeks, it jumped to over $60. That's a 20% increase in less than a month. The question is, what happened? And is this sustainable? Now, let's talk about the beating heart of this story. U.S. interest rates. On December 10th, 2025, the Federal Reserve made a historic decision to cut interest rates for the third time this year by 25 basis points. Let me explain the mechanism simply. Silver, like gold, doesn't pay interest or dividends. When interest rates are high, investors prefer to put their money in bonds or savings accounts that generate safe returns. But when the Fed cuts interest rates, the opportunity cost of holding silver decreases. In other words, when interest rates fall, silver becomes more attractive as an investment. And that's exactly what happened this week. After the Fed's announcement, silver immediately jumped above $61, then continued climbing. But there's another important factor: real interest rates. Real interest rates are the difference between nominal interest rates and the inflation rate. When inflation is higher than interest rates, real rates become negative, and this creates a perfect environment for precious metals to rise. The current situation suggests that real interest rates may remain low or even negative in the coming months, meaning the environment is set for silver's continued rise. However, and this is very important, the Fed also signaled it may pause rate cuts in 2026, expecting only one cut. This created some uncertainty, but Fed Chair Jerome Powell confirmed the general trend is still toward easing monetary policy. Now, let's move to the most important factor that many don't talk about: the structural supply deficit in the silver market. This is the real secret behind the price surge. According to the Silver Institute, the global silver market is experiencing a supply deficit for the fifth consecutive year in 2025. This means demand consistently exceeds supply. The expected deficit for 2025 is 117.7 million ounces. Let me put this number in context. Global mine production has declined by 7.23% compared to 2016. At the same time, industrial demand for silver is reaching record levels. It's a simple equation: lower supply plus higher demand requires higher prices. But the question is, why isn't production increasing to meet demand? The answer is complex and fascinating. About 70% of silver production comes as a byproduct of mining other metals like copper, lead, and zinc. This means increasing silver production isn't easy even if prices rise. Additionally, mines face multiple challenges: lower ore grades, permitting delays, high capital costs, and increasing regulatory constraints. All this means supply is inelastic and can't respond quickly to rising prices. Now let's talk about the other side of the equation: recycling. Silver production from recycling is expected to rise 24% in 2025, reaching 195 million ounces. But this isn't enough to close the gap between supply and demand. More importantly, global silver inventories are declining. In China, inventories reached their lowest level in a decade. At major delivery exchanges, available metal quantities have dropped sharply. This created what's called a supply squeeze, where it's become difficult to find physical silver for delivery. One important indicator of this pressure is rising lease rates. Silver lease rates are the cost traders pay to borrow physical silver from bullion holders to meet delivery obligations. These rates have risen significantly in recent months, indicating real pressure on the physical market. Now, let's talk about the real driving force behind silver's rise: industrial demand. This is what distinguishes silver from gold and makes it a unique investment. Silver isn't just a precious metal, it's an industrial metal par excellence. Silver is used in more than 10,000 different industrial applications. The reason is simple. Silver has the highest electrical and thermal conductivity of all metals. In 2025, industrial demand for silver is expected to exceed 700 million ounces for the first time in history. This represents 3% growth compared to last year and accounts for about 60% of total silver demand. Let me break down the key sectors for you. First, solar energy. This is the fastest growing sector. In 2024, the solar industry consumed 232 million ounces of silver compared to just 60 million ounces in 2015. That's a 286% increase in less than a decade. Each solar panel contains about 20 grams of silver. With continued global expansion in renewable energy, and despite potential pressures on renewable energy projects in America under the Trump administration, global solar installations are expected to see another record level in 2025. Second, electric vehicles and related infrastructure. Even with the slowdown in fully electric vehicle production growth, continued development in automotive technology, electrification of propulsion systems, and ongoing investment in charging infrastructure all support silver demand. Modern cars contain increasing amounts of silver. Each electric vehicle contains 25 to 50 grams of silver, and this number is increasing with new technologies. Third, data centers and artificial intelligence. This is a relatively new sector, but growing rapidly. With the massive development in AI technologies, we're seeing construction of huge data centers that consume enormous power and need highly efficient conductors. Silver is the ideal choice. Fourth, electronics and devices, smartphones, computers, wearable devices, all contain silver. With continued technological development, demand for silver in this sector remains strong. Fifth, ethylene oxide manufacturing. This is a specialized but important sector. Ethylene oxide is used in plastics and detergent manufacturing, and silver is used as a catalyst in this process. What makes this industrial demand particularly strong is that it's structural, not cyclical demand. In other words, this demand is not tied to the economic cycle as much as it is tied to major technological transformations happening globally, the shift to clean energy, electrification, artificial intelligence. These transformations won't stop or reverse easily, meaning industrial demand for silver will continue growing for years to come. Now let's move to the other side of demand, investment demand. In 2024, investment demand for silver saw a significant decline, with demand for coins and bullion falling 22% to 190.9 million ounces. But in 2025, the situation is changing. Investment demand is expected to rise 3%, especially in Europe and North America. Why? First, investors are adapting to new price levels. After the sharp rise in 2023-2024, we saw significant profit taking. Now, with prices stabilizing at higher levels, investors are returning to buy. Second, economic and geopolitical uncertainty is pushing investors towards safe haven assets. The trade war between the US and China, tensions in the Middle East, recession fears, concerns about massive government debt, all this makes precious metals attractive. Third, persistent inflation. Despite central bank efforts, inflation remains high in many economies. Investors are seeking protection against the erosion of paper currency's purchasing power, and silver provides this protection. Fourth, exchange-traded funds. Capital inflows to silver ETFs rose significantly in 2025. Just last week, funds added substantial amounts of silver, reflecting institutional investor confidence. Now, there's a very important geopolitical factor, adding silver to the U.S. critical minerals list. In November 2025, the U.S. government added silver to its 2025 critical minerals list. What does this mean? This classification is usually reserved for materials considered strategically important to the economy and national security. This new status also puts silver within the scope of potential Section 232 investigations, the same legal tool previously used to justify tariffs on steel and aluminum. Section 232 investigations allow the U.S. government to impose tariffs, import quotas, or other restrictions on products believed to create excessive dependence on foreign sources, harming national security interests. This created uncertainty in the market. On one hand, this status confirms silver's strategic importance. On the other hand, the possibility of imposing tariffs on silver imports creates new complexities for the global market. Additionally, there's speculation about a potential change in Fed leadership. The top 3 candidates for Fed chair, especially the frontrunner Kevin Hassett, are expected to implement more aggressive rate cuts compared to the slow pace Powell oversaw. This possibility alone is enough to push investors towards silver, anticipating a more accommodative monetary policy environment in the future. Now, let's talk about the question everyone's asking. Where is silver headed? In the short term, the next few months, most analysts are optimistic. The upward trend, supported by industrial deficit and liquidity conditions, is likely to continue. Some analysts expect silver may test the 65-70 range if no major negative shocks occur. Bob Haberkorn, senior market strategist at RJO Futures, said, We could see silver trading above 70 per ounce in the first half of 2026. This is a bold statement, but it's based on strong fundamentals. In the medium term, 6 to 12 months, if current fundamental factors continue, including persistent deficit, growth in green industries, solar expansion, along with continued safe haven demand, silver could advance toward $75, $85 per ounce in a moderately optimistic scenario. However, there are other scenarios to consider. First scenario, the major breakout. If the Fed continues cutting rates more aggressively than expected, if geopolitical tensions escalate, and if supply deficit persists, we could see silver exceed $100 per ounce within 12 to 18 months. Keith Neumeyer, CEO of First Majestic Silver, predicted silver will reach over $100 per ounce. Initially, this forecast seemed extreme, but with silver's current performance, many market experts now agree with Neumeyer's thesis. Maria Smirnova, Chief Investment Officer at Sprott Asset Management, said, "Metals are inherently volatile, but unless we fix the deficit, silver has only one direction to go, and that's up." Second scenario, temporary correction. If speculative positions reverse, or if unexpected monetary tightening occurs, or if the dollar recovers sharply, prices could temporarily retreat toward the 45-50 range, unless offset by strong industrial support or liquidity. This scenario isn't completely ruled out. Markets are always volatile, and silver in particular is known for high volatility. But even if a correction occurs, most analysts see it as temporary and a good buying opportunity. Third scenario, relative stability. If interest rates stabilize, industrial demand continues at a steady pace, and investment demand stabilizes, we could see silver trading in the 60-70 range for an extended period. Now, let me talk about potential risks. First, substitution and thrifting. If prices continue rising, we may see increasing efforts to replace silver with cheaper materials or reduce the amount of silver used in various applications. For example, in solar panels, there's ongoing research to use composite powders like copper and silver instead of pure silver. Second, economic recession. If the global economy enters a deep recession, industrial demand could decline sharply, pressuring prices. But conversely, recession usually increases safe haven demand, which could partially offset declining industrial demand. Third, tariffs and trade war. If the trade war between the US and China escalates and extends to other countries, global supply chains could be disrupted, affecting industrial demand. At the same time, tariffs on silver imports could create market distortions. Fourth, geopolitical shocks. Wars, natural disasters, pandemics, all can create major price volatility in both directions. Despite these risks, the consensus among most analysts is that silver's upward trend is strong and supported by solid fundamentals. Persistent supply deficit, structural growth in industrial demand, supportive monetary environment, all point to silver having significant upside potential in the coming months and years. Let's conclude now by summarizing the key points we discussed today. First, silver achieved historic records in December 2025, surpassing $64 per ounce for the first time in history. Second, there's a strong link between U.S. interest rates and silver prices. The Fed's rate cuts create a perfect environment for precious metals to rise. Third, the silver market suffers from a structural supply deficit for the fifth consecutive year, with declining mine production and shrinking inventories. Fourth, industrial demand for silver is growing strongly, driven by the shift to clean energy, electrification, artificial intelligence, and advanced technologies. Fifth, geopolitical factors and economic uncertainty are driving safe haven demand, increasing price pressure. Sixth, future forecasts are optimistic, with the possibility of silver reaching $75, $100 or more in positive scenarios. What you should take from this video is that silver is not just a precious metal, it is a strategic metal par excellence, at the heart of the major technological and energy transformations happening in the world right now. Whether you're a professional investor or a beginner, silver deserves attention and study. But always remember, investing in precious metals carries risks, diversification is important, and you should always consult a financial advisor before making any investment decisions. If you enjoyed this content, don't forget to like the video, subscribe to the channel, and hit the notification bell to receive all new content. Share the video with friends interested in investing and financial markets. Write in the comments, what's your opinion on silver's future? Do you think we'll see $100 per ounce in 2026? I'm eager to read your opinions. Thank you for watching, and see you in the next video where we'll continue exploring the world of investing and financial markets. Stay safe and trade wisely.